Good day, fellow investors. China is uninvestable. Recently we discussed 15 cheap S&P 500 stocks, and the most liked comment was how it would be interesting to see me discuss Chinese stocks in a similar way that we discussed the S&P 500. However, then immediately in the comments, Chinese stocks way too volatile, or other comments, okay, I'm invested there, 40% of my portfolio, so I can't discuss individual stocks because that's on my research platform. But according to most analysts, Chinese market is not investable now, which is something that we'll discuss in the video. And even if these stocks are a good buy, nobody wants to invest anyways. Continuing in the comments, some said it means it's the right time to buy. It depends on how many decades you want to wait. These stocks are junk, negative, the environment for outperformance just isn't there, good luck gentlemen, etc, etc. But let's look at the index in Hong Kong, and yes, over the last 3 years, 44% down, 41% down over the last 5 years. If we look, as the comment said there, from 2007 down 43%, so the environment is not for great long-term stock market performance, and therefore better to avoid China and consider it uninvestable. But let's dig a little bit deeper. Here is a great view on the market from Goldman Sachs, and the Chinese government is now intervening in the market. They will stabilize it with purchases. They already did a little bit in the past of that. And the thing is that there is a deep and prolonged equity market correction going on, 63% from peak to trough, which means something like the great financial crisis that we have seen in the West in 2009, and then China stocks fell 82 and 74%, so huge crashes, very, very ugly. But on the other perspective, now absolute valuations, we'll discuss more in detail in a moment, are down. The P ratio is around 8 compared to the 25 of the S&P 500, is really crazy. Only 5% of the Chinese wealth is invested in equities, the lowest of the world, and 220 million domestic individual investors collectively own just 3 trillion of the A-share market cap of 9 trillion compared to the 40 trillion and more of the S&P 500. And here you can see the cheapness. We are at historical low price earnings ratios. Now, this is because there is very heavy bearish investor sentiment, outflows, significant outflows. Everyone is selling. Chinese were net sellers for 4 consecutive months. Mutual funds globally have more than halved their exposures as the price is going down. That is what Wall Street does, and consequently you also see in these comments and likely comments in this video how negative the thing is. But let me give you now the perspective from a funds manager perspective. This is, let's say, the Hong Kong index, and let's say you started investing, you held a position because you believe in the development of Asia, the economic growth there, the opportunities, the growing population, and who knows what. And then after 5 years, you are down 41%. Down 41% compared to up 80% of the S&P 500, which gives you the following situation. 10,000 invested in Hong Kong is now 5,900. In the S&P 500, 18,300. Of the fund managers, there is nobody left alive to invest there. Everyone says it's uninvestable, go away, forget about it, and there is no one survived. If you have had any stocks there, better sell it because nobody wants their money to be in those stocks. That's the situation. And you can see here foreign investor selling has accelerated since mid-2023. As prices go lower, people sell and sell more, and it is unrealistic to assume that will change. International investors will forget about China. Nobody wants to touch it. Of course, that is until stocks start to go up, and then it will again boom. Maybe not tomorrow, but in a few years, usually what happens. And here you can see how the total foreign holdings on the Hong Kong stock market is 610 billion. So compare that to just 4% pension and sovereign funds. So imagine this, just 4% of the holdings, so that's $25 billion, is from foreign pension funds that own assets in Asia. Okay, but compare this, the total holdings, with the inflows to the S&P 500 ETF that gathered 600 billion in net positive flows just in 2023, 1 trillion in 2021. So this is winning. Everyone wants to invest here because it goes up. Everyone wants to leave this because it goes down. And then very peculiarly here, why is it so? Well, China, complex macro challenges, property, leverage, banking system, aging population, domestic policy uncertainty, tech restrictions, geopolitical concerns, etc. What's the difference between the East and the West? We have aging population, high deficits, crisis. Here we just had a banking crisis in the US. So, as always, it is a relative perspective. But don't go now, okay, that's cheap, let's invest. Let me show you. If we look at the PE ratios, normal companies, if we look here at the column, Moutai 23, Yibin 14, and yes, insurance, bank 5. But then if we go to healthcare pharma 42, which is then expensive, Naura 24, and then real estate 8, okay. China Construction Bank 5, but that's very hard to invest in, and others have relatively high P ratios. And the average, okay, if you weigh differently, is 17, not 8. Of course, if you take the market capitalization of the China Development Bank and then weigh it, then yes, the average P ratio is 8. But 17, still not stellarly cheap, and also explains the downfall of the stocks, because if this was 34 a year ago, then that's different, and that makes it expensive, and therefore also explaining the stocks price going down. More detailed on stocks, we have discussed Tencent, for example, 5 months ago, so you can check that video for a more detailed discussion. But yes, I own 3 stocks in my portfolio related to China. 40% of the portfolio exposure is now to China, but not to China. Those are the 3 specific stocks that I think are a good risk-reward situation, and I'm happy owning them. And you can check that on my research platform, but I don't care who will be the winner in the voting contest going forward. Will the S&P 500 keep going forward, or the China stock market keep going down? I care about my dividends, I care about my businesses, and if those businesses keep growing, I hope the stocks stay low so I can accumulate through those businesses, and over the long term I accumulate more wealth. I know this sounds crazy in this environment where everything goes just up, stocks go just up, everyone is getting richer, but those are just numbers. As Warren Buffett says, it is the ownership that creates the wealth over the long term. I'm looking forward to your comments. The disgusting comments, I will delete them. I won't bother with that. And thanks for watching. I'll see you in the next video.